there is a heightened risk now of a recession or stagflation, then corporate earnings coming down, valuations possibly coming down at the same time leads to a double whammy, and there's potential for much further to go in the form of a correction. It's going to be a very difficult piece to get right in order that we don't pre-enter effectively into a recession, and then he's trying to drag the US economy back out of that later in the year or even into 2026.
Hello and welcome to the Trump Reports. I'm Louis Sykes. Today we're joined by Stuart Clark, a portfolio manager at Quilter. Stuart, thank you very much for joining us.
Thanks for having me, Lou.
I wanted to just start with your overall assessment of how fierce the reaction has been by markets to Trump's announcement of these tariffs.
Yes, I mean, it's clearly been quite some reaction in the markets. And I think that reflects the fact that the tariffs as announced have been more penal than was generally being expected, with 10% flat tariff for most, and then specific additional tariffs over and above that on countries which have larger trade deficits. And as a result, there's been a very sharp reassessment of the risks and opportunities that are available out there. And we've seen that reflected across asset classes. You know, it's not just the equity market, bond markets reacted, the cryptocurrency market reacted. Everything's had an immediate necessity to reassess the likely outlook for the level of tariffs and potentially the duration of tariffs and what might come further down the road as well. So it's been very fierce, and unfortunately today seems to be a little bit of a continuation of that trade, of the immediate trade from yesterday as well.
And is there a sense that this is the high watermark from the US, or is it entirely possible there could be more tariffs coming down the road and we should be worried about that?
I think from the commentary, the way the speech was presented, it's clear that there is more risk for higher tariffs, specifically if there's a form of retaliation, reciprocal tariffs, as I've been referring to them internally, when other nations, the EU, China, whoever it may be, sits back and assesses how they're going to respond to these tariffs. If their response is to ratchet up tariffs further, then I would expect a very clear and aggressive response from Trump and his team in the form of ratcheting those tariffs up further. One thing which people have been talking about is, could the 10% baseline tariffs actually go lower through negotiations? And I think that's going to be a key question for us in the UK, but also for a lot of other nations who have ended up with this 10% level. Is that the baseline for the countries with higher tariff rates to negotiate down towards? And it seems that might be the case. You know, we can hopefully get a trade deal with the US, and that's not going to take a couple of days to negotiate, and then that might allow a freer flow of goods and services. But for the short term, the 10% baseline does seem to be truly that's the starting point for negotiations rather than anything else. And in that respect, it's an interesting situation for us in the UK. We have special treatment according to Trump and his team, but is there any position for us to really negotiate that lower in the short term? And what does that mean for the companies here which are trying to export over to the US?
And you talk there about that almost unexpected 10% flat rate on just everyone. There have been some maybe quite questionable maths going on in how these tariffs were calculated. I mean, Trump claimed that Vietnam had some sort of 90% tariff on the US. I believe the real figure is actually something like 9. So how should we tell who is going to get hit and where, and as such adjust, where people might put their money?
Yeah, and actually, I think within that you've really hit the crux of the situation, of the issue that we have with the way Trump has been delivering these announcements and other announcements since he's been back in office. Is it's very difficult to actually understand who is going to get hit, by how much, and when, because the more traditional approach to calculating a deficit, a trade deficit or surplus, seems to have been thrown out the window here, and they're including all sorts of additional flows into the calculation. And it's that uncertainty. I know it's said a lot, and we've seen a lot of coverage of it already over the year, but it's the uncertainty which is really difficult for markets. And I was listening to one piece from, I think it was Morgan Stanley yesterday, actually, and they said, if we felt comfortable that this was the situation that we're going to have for the next 12, 24 months, possibly 4 years, then it makes it simple for us to assess how that's going to impact on the flow of goods, the impact on currency. Simple might be pushing it a bit too far, but it's certainly easier for economists, investors like ourselves, to go out there and say, actually, right, here are the numbers. This is what it means. This is what it's going to mean to company earnings. That's what it's going to mean to bond yields, and therefore the valuations which people are willing to pay for stuff. And you can reassess your outlook for a recession versus inflation and global growth and start to crunch numbers. But the situation we have now is, I think you're right, some dubious maths which has been used to calculate this and give a high starting point in certain countries and certain sectors, and then an attempt to try and negotiate away from that. But with uncertainty, makes it very difficult for investors and for companies around the world to really work out where to commit and how much to commit. And for companies, that is in the form of investment. So, does a company want to commit to building a lot of resources in the US in the form of capex and investment for the next 3.5 years, if in 3.5 years' time we're going to see a reversal and a shift back towards globalization? Possibly not. Someone might want to try and ride that out. However, if this is a long-term shift, then it might make sense for them to build a new factory or expand a factory in the US and try and circumvent some of these tariffs. And so the uncertainty is one of the factors which has really led to quite a vicious response in the market. And I think until we get through this period of negotiations and working out what this means, we're going to stay in a heightened period of uncertainty and see quite a lot of volatility, a lot of chopping and changing in the direction of prices in the stock markets and the various sectors. Some of these sectors which have been exempt, over this initial announcement, or have been pre-announced in the form of auto tariffs. What does that mean? Are they going to come back and discuss those again in 2 weeks or 2 months? Possibly. And then how do we cope with that within the portfolios?
And as you mentioned there, I want to get an idea really of where Trump is going with this, where he could go next, perhaps. Although, as you say, that's quite difficult to figure out because it is unpredictable. It's not so much about a tariff war as Trump has tried to make out, is it? It's more about trading deficits and the US's trading advantage. Mm-hmm. How could that guide us on what we might expect next?
Yeah, I think we're trying to be generous. We're working on the basis that Trump does have a grand plan, and this is part of that process. The question mark for me personally is how much is he listening to his advisors or the experts in the field versus what he's acting on gut instinct, more of the businessman, the art of the deal, as he likes to say, treating it like a corporate entity rather than a government and a nation, which is a very intricate set of affairs to deal with. And if he's not listening to his advisors, or he's pressuring those advisors just to work in the direction which he thinks is the right way to go, then that brings in additional risks. The grand plan, though, has to be, as he was campaigning on, which is to try and lower inflation, improve growth within the US, and bring manufacturing back onshore in the form of factories and therefore jobs for your average American. The difficulty is, in the short term, the market is clearly saying we don't believe that these policies which you've put in place, or certainly the order of the policies which you're putting in place, are helping to deliver that. And in the short term, inflation expectations are going up, growth expectations are going down, the US dollar's weakening, all of which is having a negative impact on your average American. Offsetting that, there is lower energy prices, and that's good for your average consumer. And so that puts a little bit more money back in their pocket. But the big question now is, can they deliver the fiscal policy, the tax cuts, getting money back again to the end consumer to offset some of these higher costs which are coming through as a result of the tariff policies that he's put in place. And to be honest, the timing of that is going to be vital. If he can raise revenue through the tariffs, it doesn't lead to such a significant slowdown that you do see genuine revenue growth for the US government from it. And then he utilizes that to pass on tax cuts, which allow the man on the street, the woman on the street, to go and increase their spending. Then that might just offset some of the impacts that we've seen from these baseline tariffs and the additional tariffs. But the timing is everything, and it's going to be a very difficult piece to get correct, to get right, in order that we don't pre-enter effectively into a recession, and then he's trying to drag the US economy back out of that later in the year, or even into 2026.
And that's crucial to all of this, isn't it? I mean, there's this idea that the US wants to negotiate these back down. These are supposed to be a sort of threat rather than a long-lasting attack, these tariffs. But is there time for Trump to negotiate that many trade deals? And would that solve the market turmoil at this point, or is the damage done?
Well, again, this is where I'm slightly cynical about the time it takes to negotiate a true trade deal. So he can have a call with other leaders, and they can promise to look into reducing tariffs or reducing barriers to entry for US companies. But will Trump allow them the time then to actually then go ahead and renegotiate or negotiate a trade deal with the US? These are incredibly complex legal documents between governments, and they take years, sometimes months, definitely, to negotiate and then write and then legislate. And actually what Trump has shown is he's got a relatively short time frame when it comes to these negotiations. He likes the headline announcement, but then he wants to see follow through with that as well. And to a degree, he's pushing that through with the executive orders in the US, but it's not necessarily so simple. If we think about the structure of government in the UK, it's not so simple for Sir Keir Starmer to turn around and say, right, this is the terms of the trade deal we're going to have with the US, get it done, and try and have legislation passed in a couple of weeks or a couple of months. That's going to take some time. Unless we're ready with a deal negotiated to sign, that's not something which is going to happen quickly enough, I suspect, to be able to offset some of these additional issues which have been put on the table. And then you multiply that for the US to be negotiating that globally. And that's a lot of, let's hope DOGE, however you pronounce it, hasn't sacked all the people who are required to negotiate trade deals. But it takes a lot of people, a lot of time to go out and do that on a global nature. And so, sorry, I'm waffling, but I think it's going to be exceptionally difficult to do that in the time frame which is appropriate for Trump in the way he operates.
And, you know, Trump led an election campaign on the idea of we've got to get inflation down, you know, or at least criticizing the previous regime for not having got inflation down. I mean, tariffs are inflationary, aren't they, or are generally regarded to be. And, you know, you talk there about the time Trump has to get this sorted. Is this now a race against time between prices in America coming up and Trump being able to get some sort of deal in or find the extra money from DOGE or, you know, the revenues that might come in from these tariffs?
Yeah, if we look at one of the immediate responses in the market the other day, inflation expectations. So 1 year forward inflation swaps, I think, spiked up to 3.5%, 3 point something percent. There's talk of inflation hitting 4% by the end of the year if these tariffs, as they've been announced, are enacted and maintained through the period. And that's certainly not going to be, it's going to be very difficult for Trump then to blame that on his predecessors. At the moment, there is still a lot of scope, if not necessarily in all cases truth, behind the argument that I'm working with what I've inherited. You have that for a short period of time, and then your policies start to impact, and it's much harder for him to blame Biden and the Democrats for those situations. So I think there is a matter of time. We've heard the transitory word being used again, and then it's an issue which I think the Fed is going to be very cautious about using that term too much after the previous period where they referred to inflation being transitory, and then it ended up leading to sustained higher inflation. And Trump's come out and said himself, contrary to the campaign trail, he doesn't care about the higher cost of autos. It doesn't really matter if wages go up in order to allow Americans to be able to afford slightly more expensive American goods, then he views that as a positive. But that's sort of the start of an potentially inflationary spiral, which is then harder to get under control. And so there needs to be some very heavy consideration of this, again, in the way that they manage the timing and the news going forward. But I do think the risk of higher inflation and lower growth, and that potential for a stagflationary type environment, has materially increased as a result of the announcement which was made yesterday. For us, what we need to see now is really, can they, are other countries willing to negotiate and address some of these deficit issues in order to allow Trump to back down slightly, lower the rates to whether it's 10% or somewhere in between for these other countries, and have less of a meaningful impact, so that other policies have a chance to counteract some of the inflationary impact of the tariffs.
Well, I'd like to come on to all of us, as it were, everyone else in the world who is reeling to Trump's announcement earlier this week. Ray Newton-Smith over at the UK's Confederation of British Industry has said that slow and steady was the right approach by the UK. I mean, is that right, even if we can't get a trade deal, or are we going to have to fall into line with some other nations like Canada and start retaliating?
I think level heads is the right approach. I don't think you want to... has Trump started a global trade war? Probably, yes. How bad does it get? Well, if there are a lot of very fast knee-jerk reactions, then it's going to get a lot worse a lot quicker. And so whilst it seems, as a British citizen, you might want the government to come out and say, well, this is wrong. This shouldn't be done. As a result, we're going to retaliate and increase our tariffs on these certain areas. And I'm sure we've all seen the list of potential targets which could be subject to tariffs that has been published on the web. But you need to sit back and consider the knock-on consequences of some of those shorter-term reactions. So in a way, with Carney saying the other day, well, actually, what this means for us is I've had a really good conversation with my German counterpart, and we're going to work really hard on improving trade relationships with our allies. Interesting choice of phrase, obviously, to talk about Germany as their ally versus the US, who has been their closest ally over the years. But what I hope we see as a result is, rather than necessarily just a knee-jerk reaction against the US, it's that consideration of how do we improve terms of trade with the EU, our closest trading partner, with Canada, with New Zealand and Australia, with Asian counterparts. And how can we then improve access for businesses in the UK to the other consumers around the world, if the situation with the US is going to be more difficult for a prolonged period of time. And that gives us a bit of flexibility to then have those negotiations, have those discussions with the US, and try and develop the trade deal that works for both sides. Now, if that goes on across the world, and we have Canada improving relations with the EU improving relations with Australia and into Africa, then that can be potentially a decent positive as a result of the situation we find ourselves in. And one thing which I think we need to be cognizant of as well, though, is does someone like China try and exploit this situation where they have been spending a lot of time over the years trying to destabilize the American leadership in global trade? And actually, has Trump now come along and done a very good job of destabilizing the American leadership in global trade, and China steps in to try and replace that? A big risk for the EU and the UK. Well, I saw one comment this morning that maybe the toys we all need to buy for our children this year become a bit cheaper if we get flooded with Chinese exports, which should have been going to the US. But that is a risk which we're going to have to be aware of as well, that if China now can't export to the US, where do those goods end up? And how do we deal with that as recipients, of potentially cheaper goods coming into our market? And that's why I say the risk of this escalating is so significant, and level heads and a calm, well thought out response does seem like an appropriate approach to me.
And I wanted to come on to actually, what has the reaction been, and how bad is the damage for large, especially goods-based economies like China and India?
I think in the short term, there's going to be a significant impact on the ability of those countries. China has been going through its own troubles recently with the housing situation, which sort of started in consumption in China being more difficult than they would like. But at the same time, they have been trying to shift their economy away from being such an export-led, reliant economy into a more consumption-led, sort of global, not just US, but global supplier, but also consumption-led domestic economy, building that up as well, and increasing the relationship, trying to increase their relationship with near neighbours and also down into Africa as well. So in the short term, yes, there's a significant impact. And in the longer term, then maybe some of the plans, the policies which they've had in place over the last few years, you can see the sense of why they've been trying to diversify that risk away in their home market. India obviously has a big services network as well, and that might help them a bit relative to the Chinese economy. And some of the other, as you mentioned, Vietnam, some of the other nations where, ironically, as a result of the time Trump was last in power, companies had been diversifying out of Chinese manufacturing into other Asian neighborhoods, which had led to some significant growth there. Now they, as a result, have found themselves on the receiving end of these much higher tariff rates, and it might lead them to have to reassess that policy going forward as well.
Yeah, I was going to say Southeast Asia seems to have come off basically the worst out of all regions and all nations. I mean, Cambodia's got a tariff rate of 49% now, Vietnam 46%, and the markets in Southeast Asia are reflecting that as well, aren't they?
Yeah, absolutely. And I think if we can just think about the social impact for a second as well on some of those nations where actually this growth, the supply chain effectively to the world, and the spreading out from China into those regions has hopefully been doing a good thing of increasing average incomes across those regions. There's still a long way to go, but actually, if you were to, and maybe it's clear that this isn't Trump's core policy, and so we shouldn't be surprised. But if you think about the potential impact on the people of those nation states, where suddenly there's a risk to growth, a risk to the revenue stream to those countries, and therefore the wealth that's available to be spread across the people and try and raise living standards, is going to have a very, very serious impact. At the same time, where other countries have been reducing, in the US, but also other countries have been reducing state aid as well. And so we really do need to think long and hard about some of the knock-on consequences of these policies to the actual people at the end of the day, who are going to be considerably worse off as a result. But you're right, Southeast Asia has been absolutely hammered as a result of this. And in part, I think, as you mentioned, because of the slightly different way that these tariffs have been calculated as a starting point.
And just to finish, Stuart, I was speaking to US political forecaster Terry Haynes earlier this week, and his advice on the markets was avert your eyes. I mean, is he right? Are we all just going to have to weather the storm on this?
I think and again, I don't speak for Quilter overall here, so this is my views, and it'll be views which are reflected in my portfolios, or our team's portfolios, I should say. But if you're a long-term investor, it's your pension fund, you've got 40 years until you're retiring. I wish I had 40 years until I was retiring, but if you have that long-term horizon, or you're in a fortunate position where you don't need to worry about the funds being available at the moment, then of course, sort of shutting your eyes, even indeed continuing to gradually invest through periods of tough market conditions, is the absolute right approach to take. But we also have to be cognizant that if there is a heightened risk, and there is a heightened risk now of a recession or stagflation, then corporate earnings coming down, valuations possibly coming down at the same time, leads to a double whammy, and there's potential for much further to go in the form of a correction. And that's where we as professional investors, although we're not reacting immediately, we don't want to take a knee-jerk reaction. We were fortunate. We came into this underweight risk within the portfolios. We had some precious metals exposure within the portfolio. That's held up quite well. Stuff like that, which has allowed a diversified portfolio to try and weather the storm. And then we'll hopefully get the opportunity to go in and pick up some assets at cheaper valuations further down the line. Trump's team has come out and said, people within there have come out and said, Wall Street needs to trust us, but we need to be able to have trust. I'm not on Wall Street, I'm based in the UK, but you need to be able to believe in the rule of law. You need to be able to believe in how policies are going to develop and be able to interpret that over a short, medium and long-term horizon. And that's the way they're going to be able to rebuild trust, I think, over time. It's not necessarily the policies per se, but the way it's delivered and the way the interaction is with market participants and the man, woman on the street, to allow us to sort of understand what the big picture is and how we get there and what we need to endure to get there. So I can see, again, a long waffly answer, so sorry for that. There's the potential for more short-term pain in this situation, particularly if these tariffs are enacted in full. And if a global trade war escalates from here, then there's a heightened degree of risk on top of that. If we can have a calm conversation and try and back ourselves away slightly from where we are today, then hopefully this can form a new base, and then that gives us an opportunity to reassess the conditions going forward and consider overall levels of risk within clients' portfolios, and for general investors to consider where they want to have allocations.
Well, Stuart Clark, thank you very much for joining us today on the Trump Report.
Thanks for having me.